Okay, hi everybody. This is March the 5th, 2025. This is episode number 12. I cannot believe it. We already did 12 episodes, so we are on the 12th episode. This is the physics of Bitcoin with Giovanni. And,
We lost your sound.
okay, I don't know what the music. No, I think it's something in the background. Just a second. I have some video running by the background that is distracting. Okay, I just closed it. Yeah, what happened if I have the YouTube channel on? He will start. Anyway, yeah, and it's very distracting. Anyway, a little glitch, technical glitch. Um, so, well, we usually start with a small introduction about the show because we are assuming that new people are joining and they are asking what is this physics of Bitcoin. It's basically our particular approach in understanding Bitcoin. Stephen and I have careers in physics. We got our PhD, in particular in astrophysics, uh, and eventually we actually uh, change career, or we continue our physics explorations, but apply to different fields. Um, and This actually allowed us to see how physics works when it's applied to slightly different environment. And physics is so fundamental in trying to understand the universe. It's really a way of thinking about data and reality in general that works for everything. And that is our angle in understanding Bitcoin, because you can look at Bitcoin because it's much more than just an asset. It's a social network. It's There is a physical component to the Bitcoin due to the mining, so energy issues, cost of productions issues, and all these aspects of Bitcoin make it much more interesting, deeper than just analyzing a particular stock or the market in general. And so actually our physics approach, that is basically analyzing the data like if it was a physical phenomena, really works. You get a lot of insights that maybe you don't get from other analysts that use more traditional methodology. So we usually go a little bit more technical, in depth, in terms of the different tools can be used in understanding Bitcoin. So it's a different type of understanding. A show is not supposed to be substituting some of the, let's say, up to date news, even if sometimes we do cover some recent news. It's more like an in depth analysis, or going down the rabbit hole in seeing what the patterns of the coins are, if there are very precise patterns or statistical behaviors, but also dynamical behavior over time, that can be characterized using the tools from physics. Do you want to add something or elaborate on what I said, Stephen?
Well, Bitcoin, unlike other financial assets, it is grounded in physics. I mean, gold is real. You'd have to dig it out of the ground. But other than that, and other than commodities, Bitcoin is grounded in reality, in the physics of the energy and the mathematics, the cryptography, the hashing. So it's grounded in lots of energy and lots of compute power. The world's largest decentralized supercomputer is in process every moment, hashing at 800 exahashes per second continuously. And this makes it very different from any financial asset like a stock or a bond. It's really just created purely by humans.
Exactly. So we usually start with an agenda that uh, Stephen is going to share with us in a second.
All right, this is show number 12, and that little thing up in the upper right is the structure function. And it's a function of two things. We'll talk about what those are, but the Q is the moment and the tau is a time lag. So on the next slide, we have our agenda. This will be primarily about structural analysis, but also about moment analysis. Now, in the last 2 weeks, we've been doing what's called scaling analysis. So it's a different form of analysis of the price series, the price history that we presented last 2 weeks. If you were there for either one of those shows, you remember we presented the Hurst exponents with the H values and showed that using the standard method that we achieve over 0.9 across the entire point history, and something that is 0.5 for random walk and 1.0 is very, very strongly persistent and trending. But like the scaling analysis, structural analysis looks across a range of time lags, but it looks at different moments of the distribution, and we'll define what that is. You have power law relationships appear actually at multiple levels. And as before, we detrend prices initially with the power law, and then we analyze the log residuals, just like we did for the Hurst exponents and for the DFA analysis that we talked about in the past couple of weeks. And we'll examine the three zones, the power law core, the transition zone, and the bubble zone, and the division is 40, 20, 40. So we assign 40% of the lower residuals to the power law core and the highest residuals to the bubble. The transition is intermediate. And in order to test the sensitivity, we look at both weekly and daily data series and run those through the analysis, and we find broadly consistent results for both of those. As before, there's a turbulence analog, and we see a cascade from large fluctuations down to smaller ones with time. And this is an analog to what happens in fluid flow with fluid turbulence, and we'll show that and compare to that. Not surprisingly, perhaps, for those of you who have been with us for a number of sessions, there's strong support for the power law behavior, the long-term power law behavior of Bitcoin. So most of it's going to be on this structural analysis technique, but I've got a few slides at the end on what's called moment analysis. It's a different method. It also supports the power law, and it also uses moments. But first, with the structure function analysis. Again, we presented scaling function work with the Hurst, the DFA, and the multi-fractal techniques in the last couple of weeks. This is related, but what it does is it looks at statistical properties at different scales. You can check for a power law of the lag time. There are moments, and you evaluate it for several different moments. And the larger moments, these are integer values, come from booms and crashes. So what we do is we take the price series x of t, weekly or daily, and then we detrend that, we remove the power law, and then we have this primary equation. That's the scaling function. There's one for each value of q for each moment, and it's a function of the time lag, which is this Greek letter tau. And the way it's composed is you look at the price residual here, now and in the future, it's some lag tau. And you evaluate this for a broad range of different values, really like 100 different values or so.
So a comment here. So we could do this without the trending, and we will see it will be a way of verifying the scaling property of Bitcoin, right? In particular, these X are you taking the logs of the price itself here?
These are the log price residuals.
Real price residual. So, if you do it just with the log of the returns, for example, or you can take the difference, or you could take the ratio also, and you do this over and over. This actually will be a verification of a scaling property of Bitcoin. It will be, in fact, the definition of scaling variance. If this property it's true, if you actually this is valid for any scale, similar to any scale. If this behavior is similar to any scale, then this is showing that scaling value. But you are testing it with maybe trended. But we know already, as discussed many times, that the derivative, because taking basically the trend will mean looking at the changes, right? So the derivative of a power law should be a power law, right? So these are
So we're looking at the scaling properties after you've already detrended, of the residuals. And so this exponent Q is the moment value. So remember that. And small Q's refer to small price changes. Now, once we construct that function, we can then actually build another power law, which is a power law to some exponent of the lag, where that exponent is a function of the moment. So we'll look at that too. And that zeta, that funny Greek letter is called zeta, that is the scaling exponent. And that can vary with Q, but it turns out that you can fit a power law to that reasonably well. So that is also interesting, and we'll show that.
Yeah, very interesting.
So the first thing we do is we look at the zones to make sure that they're sort of distinct here. So this is a probability distribution of the zones, and we've shown this before in other contexts. And we've got a clear separation. We've got a Gaussian core zone. We've got a transition zone that has a fat tail on the right side. And then we've got a bubble zone that has a very, very long tail, extending up. So that's the 40-20-40 division that we put in order to do the evaluation. So here are structure functions for different moments, 1 through 5. And we're showing both the core and the bubble in this graph, which is a log-log graph of that function, the structure function, the log of that. And you can see it spans more than 8 orders of magnitude. So it's a very broad range. And then as a function of the lag, which in this case runs from 1 week up to 100 weeks, because this is a log-log plot. So it's the log of this lag tau. I guess it's actually only going up to, 50 weeks. So it's like a 1 year time frame. So what do we see? We see, first of all, for low Q, the smaller fluctuations, it's less dynamic. Those are the curves up at the top of the graph, the blue one and the orange one as the core and the bubble respectively. And then as Q increases, it's a much broader dynamic range in either the core or the bubble case. We see that the bubble is steeper, which is not surprising for the whole set of 5 different moment values. And we also see that the core functions are not straight lines. The bubble ones are pretty close to straight lines, power laws in this log-log plot. But the core breaks and flattens at about 5 weeks. And we see that for nearly every Q, for Q of 2 and above. It's
almost like if it were 2 power laws, right?
Almost like 2 power laws, right? Absolutely. So that's interesting.
Mm-hmm.
But part of that is definitional in the sense that, you can't, if you leave the core, right, you end up in the transition zone, right? So, there's some sort of a priori imposition of structure there. And the next one is the transition zone, and it does, in a log-log plot, look pretty much like a straight line, but it's superlinear. It actually curves upward, particularly for the higher Q values. And this has a very large range. It goes from 10 to the minus 13 up to 10 to the minus almost 1. So, 12 orders of magnitude for the full suite for the transition zone. So it's a power law plus some steeping, and the range is even larger than that for the bubble because it's maybe not as mean reverting as even the bubbles are, right? They'd have to rise and then fall.
What are the slopes here?
The actual values?
Yeah.
Yeah, I will show those in upcoming. I'll show what those are.
Okay.
Actually, it's here. So the slopes are the scaling exponents, and it's the best fit power law slope for each one of those lines. So we've got 3 zones, and we've got 5 lines, 5 moments for each one, labeled 1, 2, 3, 4, 5, and then these are the power law slopes. So for the core, it starts out a little less than 1, and it goes up to about 1.4. For the transition, it starts at 1, and it goes up to over 4.5. And for the bubble, a little less than 1, and it goes up to almost 3. So we see that the core is actually somewhat steeper than you'd expect for a turbulent fluid, but not too much. And the bubble and transition are much more steep. And in fact, the transition is the steepest of all. This is what happens in fluids. This is turbulence modeling. And their classical model for turbulence is the Kolmogorov spectrum, dates from 1941, the paper. And this shows a 7 order of magnitude range in the energy as a function of the wave number. Now, the wave number is the inverse of the wavelength. So, you know, on the left-hand side, you've got small wave numbers. Those are long waves, long fluid waves. And the turbulence, the highest energy. And what happens is that the large energy bubbles cascade down to smaller ones, and they adhere to this, kind of power law behavior, which is a negative 5/3 power law in what's called the inertial range. And then eventually they dissipate and you get a break.
So in a certain sense, the wave number is also some kind of it can be also understood in terms of time, because there is a periodicity associated, right? There is a period associated. So longer wavelength means longer period. And so in a sense, there is an analogy with that, having X being the time versus the wave number.
Yeah, precisely. So the analogy for finance is, on the y-axis, you're looking at volatility, and on the x-axis, you're looking at time scale. Mm-hmm. This shows a comparison to, well, first of all, the 5/3 model. We see the core rises to 1.36, but it starts at 0.84. So it's kind of roughly similar to what's called K41, which is the Kolmogorov. It means it has some mild intermittency, but remains close to self-affine scaling. Self-affine just means affinity with yourself, self-scaling. And here it's compared against a more sophisticated version that is an outgrowth of that model, dates from 1994, called Chez-Levesque. And it shows the predictions with that kind of turbulence and then compares the core and the bubble. So the core zone is close to the fluid kind of turbulence model, but less intermittent. But the bubble is much faster, and it's interpreted as stronger intermittency than even fully developed turbulence. Okay, now let's look at the daily data.
It's a storm or something.
It's a what?
It's a hurricane or something.
Yes, it's a hurricane, a tornado or a hurricane. So this is the daily data, and we can see that the probability distribution function for the residuals has similar behavior to the weekly, which is shown in a little small graph on the side. You see a little more structure, but basically quite similar. So we've got consistency there. And these are now the structure functions for daily data. So the timescales are different, right? It's in days instead of weeks. And this is the core, and it's showing log-log plots. Again, this is less steep than we'll see with the transition in the bubble zones. And we see the same flattening here, but now the flattening, instead of being at 5 or 6 on the scale, is more like 30 because it's in days. So it's at 5 weeks roughly. And you see it out when you look at 30. So you look at 10 to the 1, that's 10, and the next line over is 20, and then 30 is the next line over. And that's where you see the the flattening kicking in. So it's the same flattening that we saw in the weekly. This is the transition zone. And again, we see pretty linear, but also some upward sloping, some steepening of the power law at longer time scales, especially for higher moments. And then this is the bubble. And here there's a little interesting feature in the daily bubble, which is you get these kind of bump where you rise up and then you hit a plateau. And that flat zone is around, 1 week in length. So it kind of starts at 4 days and then goes out to maybe 8 days or 9 days. It's kind of interesting. That might be a tradable thing, right?
Yes.
You're good for 2 or 3 days, but then it's time to get out. Yeah. Again, that's in the bubble zone, and then it reverts, and it reverts back to something that looks like the sort of power law that it started out with,
right?
Almost. And this just shows the core and bubble compared, and we see, that the core has a smaller span, smaller dynamic range than the bubble, and it's flattening later on, and the bubble has this little plateau earlier on. Okay, let's look at the scaling exponents. They're similar to what we saw with the weekly data, so that's good. We have consistency. The core, though, runs higher. It went up to 2.6. So that's quite interesting, actually. It's a good bit higher. And in fact, it's larger than the bubble. The transition number, the peak one at the highest moment, is similar to what we had before, just a bit higher. The bubble's a little less pronounced than it was, but it's still faster than fluid turbulence models. So this is kind of interesting. It's something for you to ruminate on, Giovanni.
Yeah.
Again, there's mean reversion.
Absorbing this information. It's interesting.
Yeah.
What I love is the fact that we see this over and over multifractal behavior, right? It doesn't matter how you slice it. You see these scaling properties at all the different places in the dynamics, in the it's in the structure, but also in the dynamics. It's really cool.
Its power law is all the way down.
Yeah.
So we can then take those exponents and fit a higher order, if you will, power law to those structure exponents. So if we do that, the best fit for the core, you're basically taking log of the core scaling exponents against log of the moment, Q, and doing that as a power law, log. So for the core regime, the exponent is 0.7 roughly, and that suggests moderate scaling behavior, a structured market, relatively predictable fluctuations. Well, this is all what we expect in the core. Somewhat Gaussian line, but with some heavy tail effects, because we know we break out of the core, right? So that's all good. The transition regime, it's essentially one, neolinear scaling. Extreme fluctuations grow much faster than the core regime. It's almost turbulent behavior, so volatility spreading across multiple time scales in a highly unstable fashion. In the bubble zone, the scaling index is 0.5. And that suggests that volatility is dominated by short bursts, not long-term effects.
Right.
And the large price moves are more frequent than you'd expect from a normal model. So high intensity shocks, more nonlinear and chaotic behavior in the bubbles.
Yeah.
Makes sense, huh?
It does. So
the summary is the Bitcoin residual structure shows clear turbulence-like intermittency in bubbles, and the core region remains more power law with self-affinity. Okay, so that finishes the structural analysis portion. I don't know if you want to comment at all on that before we move into the moment analysis.
I like it. And again, I like where you're subtracting the overall power law because now we are focusing on the changes. And basically, we are showing that even the changes, so the dynamics of Bitcoin, it's power law like for the core.
Mhm.
And the way to understand the bubble is that the power law is still there because it's still present, but now the changes are less structured, and there is more chaos. There is more um, burst. We know these several days, right? It's probably also linked to maybe external events, news, or things like that. FOMO. It's FOMO driven, right? Um, so yeah, and then corrections, from when the market starts to go too off, too far away. So it makes sense, and we describe these things that we know, that we observe with our own eyes, but now we have a language to describe it. It is, and in fact, it's even actionable because I think if you start to dig into these things, then you could uh, learn some stuff that you actually can use,
Right.
even for trading or something. So it's very cool. I like it.
Yeah. Good. Okay. So the next thing is a different technique. It's moment analysis. It's over the full 15-year history of Bitcoin data that was available, and it computes the higher order moments. And this, I do not subtract the power law. I just look at the series of log returns, daily log returns. So it's just the ratio of tomorrow with today, the log of that, right? Of
Right.
that change. Okay, this is some very interesting results. So what this does is this is computing. 2 is the baseline Gaussian case. 3 is the skew. 4 is the kurtosis. 5 and 6 are the higher order moments. So it looks for fat tails. And these values are all normalized to the expected scaling given the standard deviation for the series. So you raise sigma, the standard deviation, to the power q for the particular moment in order to get the values that are shown in the table, which are relative moment values to Gaussian. So 2 is Gaussian case, so it's always a 1.0. The next moment, 3, which is the skew, is 4 times larger than the Gaussian expectation. So it says you have got a heavy tail distribution. And we know where the tails are, right? We see from the PDF plots. The tails are on the right. And then the 4th moment, the kurtosis, is 25 times larger. And that says extreme price movements dominate higher moments. The 5th order moment is 229 times larger. Very strong tail effects. And the 6th moment is 2,400 times larger. And ChatGPT broke down and said, yeah, the market exhibits power law behavior. Now, I'm going to show you in the next slide something that does not adhere to power law behavior. But before I do that, we can take the log-log regression, these ratios, right? Another power law. And we can say the log 10 of Q, the moment number, and log 10 of these ratios, which run from 1 to 2,400. We can fits to a power law.
But what is the interpretation of this? Do you have an intuitive understanding of this?
Yeah, I'm developing it. And I'm still doing work, and I'm going to keep doing more analysis like this because it's really, really interesting.
And by the way, all these is deserve publications.
I know. That's what I'm feeling.
We should put it together and write a paper.
We should.
Yeah.
I think we could do
under the institute name, because by the way, we already mentioned that we are planning to create an institute for the science of Bitcoin. What is the name that we settled on?
I think the Bitcoin Science Research Institute is our leading candidate for the name right now.
Bitcoin Science Research Institute, yeah.
Yeah. I think there are 3 papers here. There's a paper on the scaling analysis from the last 2 weeks, the Hurst exponent stuff.
Yeah.
There's a paper on the structural function analysis that I just presented. And there's a paper on moment analysis, and then this work is ongoing. We got to do more.
Yeah,
and right now I'm just presenting the whole series, but you can break it down into chunks. You can do other things. So
yeah.
there's a lot for us to think about.
But I do want to understand this graph because it seems really relevant.
It's really relevant. Yeah. And I don't quite understand it myself, but I've got some interpretation around the overall thing that I'm going to show you.
I wonder if this is somehow related to, sort of network, because it's almost telling us that these bubbles are another expression of a scaling property of Bitcoin, right? That they are not a separate thing, like sometimes we want to understand it, but they're actually an expression of the fact that we are dealing with a scaling system. That, kind of like that, right? Because if there is also power law in now, because as you look at larger and larger momenta, basically you're looking at these deviations, right? How the characteristic of these deviations, but these deviations are themselves organized as a power law. So it seems that two things are somehow connected with all this scaling.
Yeah. I have a vernacular explanation for this. And my vernacular explanation is that if you give high skew and high kurtosis to a traditional finance guy, they tend to run away.
Right.
Right. And what we do is we embrace it. And the reason we embrace it is because these are a result of the power law underlying. And the other piece of that explanation is that we're seeing this cascade to the higher moments, right? And that with the power law, you expect to see that in the first derivative, the second derivative, and the third derivative, right?
Yeah.
And these moments are like that. They're like higher derivatives.
All the way to the fifth, right? Because
right.
If we have, yeah, exactly. Because the power law is a 6 power itself, and yeah, exactly.
So, what they do is they try and take a couple of derivatives, and then they expect everything to be mean reverting, right?
Yeah.
And we say, no, we're never mean reverting. We're never mean reverting. That's the whole message here.
Yeah,
and
so all the other, like for example, you don't want to use with normal assumptions, right? Like we are dealing with the market efficient deposits, Black-Scholes, random walk. There is no random walk. There is no random walk.
We're only mean reverting when the bubbles, so the bubbles are mean reverting, right?
Yeah, overall, yes.
But the entire price series is never mean reverting.
Absolutely.
Okay, so let's compare it to something that is mean reverting. The S&P 500. I took the SPY. I took 20 years of the SPY. Now, we've got 7 days a week price data, no holidays. They've got holidays. So 15 years of Bitcoin is the same as 20 years of SPY.
Right.
Same number of data points, more or less. 5,000 roughly in each. Now, it's the same process. The daily log returns scaled by the standard deviation. And what you get is, for the third moment, the skew, you get a negative value. For the fifth moment, you get a negative value. And because you're squaring and cubing, you can only get negative values for the third and the fifth, right? You're always going to get positive values for 4 and 6.
Yeah.
Because of the way you do the calculation, because it's, you're taking squares and fourth powers in there.
Right.
So the interpretation is the variance is near 1, daily log returns, stable volatility. The skewness is negative at, the third moment. Downturns tend to be sharper than upward moves. The kurtosis is very high. The returns are not normally distributed. Crashes and booms are more common than in the standard Gaussian model. And 5 and 6 explode in magnitude. 5 is negative. Extreme events, financial crises, flash crises have a much higher probability than classical risk models assume. And this is where everybody gets caught out in classical finance, is by the fat tails, right?
Right.
And, the black swans, as it's called, or what broke the bank for long-term capital, right? They assume log normal distributions. I mean, these are Nobel Prize winners. And
the fat tails are our friends for Bitcoin because we are all positive fat tails.
Exactly.
So, and the people that say Bitcoin is more risky, they'd never look at this data. We are showing the other way around. We are showing that the normal market is more risky.
They see high skew and high kurtosis and they run away.
Yeah.
And we say it's a feature, not a bug. Mm-hmm. So what I say is Bitcoin is better for every moment.
Yeah.
That's my tagline.
It's a beautiful saying.
Okay.
Because even when we go down 80%, right? Mm-hmm. We're going down from 10 pair. That is
right.
The market went up 10 pair. Okay, it can afford that 80% correction. That is what is going on with Bitcoin. But the general behavior we know, right, is stable. It's a power law. It only goes up. So when people say it only goes up, Laura, it's really true. It goes up and more up, and the only bear market we have is when we correct from some crazy deviations that are unsustainable,
So there are a couple of things I want to do going forward. One is I want to include NASDAQ and see how that does, but it'll be, similar, but more volatile. And then I want to look at master MicroStrategy and see what that looks like.
Yeah.
And
probably before and after 2020.
Yeah, mainly from August 2020 on, see what that does.
Yeah, maybe you compare it also with before.
Yeah, and before, yeah.
Because it would be interesting to see what happened before they adopt Bitcoin and after they adopt Bitcoin, right?
And then I want to look at Bitcoin in different time frames. Yeah, so you see in the little insert, the white one, that shows those are the Bitcoin numbers. So you can compare them to the S&P numbers, and they're both more positive and higher value, and that's a good thing. Mm-hmm. So, then I said, I asked chat, I said, look, there's a very steep growth. There's this power law, the seventh power, right, of the moments, 6.9 or whatever, seventh power. And I say, yeah, that's scary, right? Very high values for these high moments. But are we okay? Because the Hurst exponents are always greater than 0.9, and volatility is falling with time. So, are we in danger there, was the question. If volatility keeps dropping faster than moment growth, Bitcoin remains stable over time. If the Hurst exponent remains above 0.9, power law growth remains dominant over moment expansion. If price growth continues to outpace risk growth, Bitcoin remains a strong convex bet. Bitcoin's extreme moments are likely a feature, not a bug. Convexity remains dominant.
So can you explain the role of convexity here, what is meant and why?
Yeah, convexity says that, basically says there's more upside than downside.
Right.
But you can show that numerically, and you can derive a convexity measure, and it's pretty high. Okay, closing summary. The structure function is complementary. It confirms the scaling function analysis. We look at various moments across many time lags. We did it for both weekly and daily data. The transition was steepest, had the largest range. It showed highly unstable. It's steeper than fluid turbulence models. The bubble was steeper than the core on the weekly, but the core was steeper than the bubble on daily data. So that's kind of interesting. We need to understand that better. On the daily data set, the bubble chaotic high intensity shocks. Core is more Gaussian with fat tails. We have intermittent turbulence on top of a self-affine or self-affinity core power law. That means volatility grows faster at small scales. And the moment analysis says that the market exhibits, I can't even read this, I'm covered up by something, but basically clear trending with heavy tails, and the large high moments are a feature. Okay, thank you.
Thank you. It's very, very, very interesting.
Hand it back.
All right. Yeah, and I think all this stuff is just scratching the surface, and it's really interesting and worth to be explored more. Okay. I want to cover a couple of things. First, this article. So the power law has been featured already in the past. Let me close this. On Forbes. It's mostly this professor. He's a professor of economics. His name is Korok Ray. So he's mentioning the power law. So it's nice. It's nice to see the power law mentioned some, in this mainstream financial journal, or no, maybe actually magazine. But yeah, so he does a good job in expressing what the power law is about, mentioning the fact that we can derive a price from the addresses. I think the main, it does a good job. And then he goes in this section where he talks about causation versus correlation. He says, does the power law establish what causes Bitcoin's value? No. Well, if that is true in general, it's true. Like if you have a graph that shows that you can derive a power law in time, right? That is part of what the power law theory, because it's not just a model, we call it a theory because we try to understand the overall behavior of Bitcoin through a causation chain, right? I call it a causation chain. So in physics, we do that often, right? We see an empirical phenomena, for example, in this case, the fact there is a power law between price and time. And then we try to go deeper and trying to find a cause. Like, for example, this happened, in fact, with power laws when Kepler discovered its laws, right? So, for example, he discovered there is this was in 1600s, that there is a relationship between the distance of a planet and how long the planet takes to go around the sun. And if you do a graph of a distance versus the time, you get a power law. In fact, it's a beautiful, beautiful power law. It's almost scary if you ever plot it. I suggest that anybody that has access to ChatGPT, or you can download the data, you can do it on a spreadsheet. It's really once in a lifetime. Everybody should do it, because it's so cool to see this very, very precise relationship between these two quantities. That the data is available to everybody, the distance of every planet and how long it takes to go around the sun. And it's kind of a beautiful relation because it's also, in a sense, the start of a scientific method and our modern world. Everything else that we enjoy, even the computers, that you're using right now to listen to us, eventually was derived from this new understanding of a world, that everything in the universe seems to be ruled by mathematics. So it started with a power law, in a sense, right? And it took 100 years to go from this empirical observation, because everybody was fascinated by this, and it was a demonstration that there was order and organization in the universe, to actually go deeper and understanding what could be a cause for this behavior. And this was done by Newton almost 100 years later in his famous book Principia Mathematica. And he explained that you will get a relationship of this kind with what Kepler observed. It goes as, and correct me, Stephen, if I'm wrong, but it's the power law. It will be the distance equal the period to the power of 2/3, right?
Three. Well, right. The period is 3/2 the
Right.
power of the distance. Yeah.
So the distance is 2/3.
Yeah.
And so Newton is playing that if you add some kind of a mysterious, we call it a central force, right? So basically a force, some kind of a push. And at that time, it was very difficult to even conceptualize this thing, right? Almost like some kind of an invisible rope or something that pulled two masses, right? Every mass are pulling each other. They are attracting each other. Of course, and the force is the same, right? The force that is applied on the sun due to the Earth, let's say, is the same force that is applied to the Earth due to the sun. The reason why we think the sun has kind of a center and not mobile is because for every force there is a reaction. The reaction in this case will be an acceleration. And the acceleration of the sun is very, very little, because the acceleration is inversely proportional to the mass. And so it's not correct, because even the sun is moving a little bit due to the pull of the Earth, but it's so small that we can kind of ignore it, right? But this idea was, well, if this force is inversely proportional to the distance of to the square of the distance of the planets, and is directly proportional to the product of the masses, then I can show you that under this assumption, I can derive Kepler's law. So Kepler's law derives from this. But what did he do was to substitute a power law with another power law. But in physics, it happens very often to do that. You go a little bit deeper. You're trying to understand something. You say, okay, now instead of just accepting that there is such a law, and I don't know where it comes from, now I'm trying, to explain it as some kind of push and pull. But even that push and pull, that pull in this case, because it's just a pull for gravity, is a push and pull for things like electricity, for example, where electrical attraction between two charges or repulsion. But now you are using another power law to explain the previous power law. So you could say the same thing, right? This guy says basically, because Giovanni is showing that the power law in time, it can be derived from the power law of addresses versus time and the Metcalfe law, now two power laws. It doesn't necessarily tell us about the cause. Well, yes and no, because in one way, it's true, yes, that there is a correlation there, but because we are showing a chain, we are saying, well, what else can explain the growth in price? Well, people are adopting it, right? People are joining the system. So it's a deeper explanation. Of course, it's not, now you are left with explaining why people are growing with the cube, but that is also what viruses do. They, in certain situations, viruses grow. Virus infection grows with the cube of time. Is that an explanation? It's that, well, okay, sure, you could come up with, something deeper, and now, maybe some kind of network property of how something spreads on a network. You could go deeper. You can always go deeper. But I think we did a little bit more. So I don't agree that we are just seeing correlation here, because the fact that we went from something that you will not be able to give a deeper explanation. Oh, okay, there is a power of 6 between price and time. It's very unsatisfactory, right? Okay, we observe this, but what is due to? And then say, well, it seems that actually can derive it by something more fundamental, like the Metcalfe law. And by the way, we do have an explanation of why the Metcalfe law works in the way it works, right? It is kind of proportional to the number of links. Now, there we will have to explain, and I'm working already on this, I'm thinking already of this, we will have to explain how the market knows that we are dealing with a network. How is possible that the price discovery of Bitcoin works with the square of the participant? I think that is really the missing link that we need to explain. But these two things together, the fact that there is a cubic growth of adoption, and the market responds with the square of this adoption, I think is more than just correlation. So I don't agree with this.
Sure. Well, he's looking for a microeconomic explanation that he calls a structural model. We've just shown structural analysis that shows structure of function analysis. It shows a lot of power laws, right?
Yeah.
The other piece of this is that the Bitcoin is a protocol. It is fundamentally a network protocol.
Mm-hmm.
It's multiple network protocols. So the first two are the miners and the full nodes, right? And those are both networks.
Yeah.
Those are both networks at the core. And then the other networks are emergent networks above those. And that could be, the exchange networks and so forth, right? That grew up. And now they're like 10. It's a meta network with 10 or so networks, depending on how you classify them.
Yeah. But, he's right in when they say I am optimistic that a more comprehensive agent-based model could amplify the power law. Yeah, I mean, it's all there. It's just that, I will not say that it's just correlation versus causation. It's one step towards causation, and we are identifying some kind of causation chain by saying basically the price can be explained almost totally by adoption. And now, of course, there are more complicated things because it's a loop, right? Because when the price going up brings more adoption, etc. So it's more complicated than that. But the fact that we already observe this interdependence between all these power laws, it's deeper than that. It's not just some correlation that it's meaningless.
Well, he mentions agent-based models, and there's already a problem with that. I mean, one of the things he's wanting to do is say, well, there should be agent models for these different categories, corporations and large traders and small traders and nation states, right?
No.
And they'll exhibit different behavior.
No.
But he's missing out the point that sometimes the agents are fermions and sometimes they're bosons. Right? They clump. You get this madness of crowds, mass behavior, and that's what drives the bubbles, and that's what drives the log periodic Sornet type behavior in the bubbles.
Exactly. And if it is a really scale invariant, it should not be a difference in quality between a large investor and a small investor. We already show that. We already have graph where we show that it's different power laws with different slopes. A whale behaves like exactly. There is a Metcalfe law for a whales. It's just that the slope is different, right? The market reacts strongly to the increase in whales. It reacts with the power of 5, for example, instead of the power of 2. But it's still a power law, But again, it's one of these multifractal behavior we observe. I want to go back. I'm going to actually create almost a response to these in the next few days, and maybe I can send it to Forbes if they want to publish it, or we will discuss it in the next episode, maybe a formal response to this. But I still agree that yes, I would like to see in my head, somewhere a formal explanation of how the price discovery follows a power law. That they're basically similar to the Metcalfe. And I think I have a half of a proof in my head, but we can go in the details of this next episode. But it's cool that it's bringing some discussion to this. That this article is bringing some discussion to this. The other thing I wanted to share, it's a little bit of a quick analysis of the market. In particular, I wanted to share this graph. So this is one of the indicators that I developed. It's basically superimposing the cycles one on top of the other. So where the dates are the same, but every time you go down, to one of these levels or layers, you're looking at the previous cycle. So the dates should be shifted, the year should be shifted by 4. So the dates that you're seeing there, when it says November or March, whatever, is the correct date, but you will have to go 4 times, 4 years before for the yellow curve and 8 years before for the red curve. I don't have 12 years. I should add it also that layer. But this allows you visually to compare what happened in similar periods during the different cycles. You can see that all the peaks seem to be concentrated in the same region, kind of here. So if there is a peak, we are expecting to happen Q4 of this year. We don't know yet. I'm trying to project it where I'm expecting the peak to be here. The 200K target is based on how big the deviation. So I want to explain this because I even today there were some people commenting on my X account on this. For what concern the power law, if you look at the big eye, the bird eye picture, the bubble do not exist because in a sense they cancel each other, right? We go here, we come back to the power law support. We go here, we come back to the power law support. This happen over and over again. So we use this terminology, zero order, first order in physics. Zero order discussion, so the most basic discussion that you can imagine, you will say, which bubbles are you talking about? There are no bubbles. They cancel each other. This is also shown by, for example, plotting a 4-year moving average of Bitcoin. It looks flat. There are some slight bumps, but it basically looks like the power law over, the long-term progress, right? But they do exist, and we want to understand, and this is why we do this additional analysis, right? And so there are these large deviations that seem to be regular and periodic. At a certain point, we will do analysis of these, maybe using different techniques like Fourier analysis. I want to show you a Fourier spectrum. I don't know if you ever done it, Stephen, but it's a technique that we use all the time in physics to identify periodicities, and you see a very clear peak at 4 years. It's undeniable. So there is a clear periodicity in the data. I mean, this is one simple method to show that the periodicity is there, but there are more sophisticated tools that show this. What you're seeing here in the lower graph is another way of showing this periodicity, where basically you superimpose the cycles with this chosen, because you can choose different windows, right? And you can superimpose. If there is a signal and the periodicity is real and it's a coherent periodicity, right? All the peaks should align, and so they amplify and the noise cancel. And so what you're left with is something that looks more or less like a waves, right? And this is what I'm trying to show here, that if you take the different cycles and you sum them up, right, the red is the second cycle, orange is the existing cycle, white is the previous one, what you get is this blue line. And you see the blue line is not flat, right? Because I'm already subtracting the power law in this case. These are residuals. So first I take the power law away, I'm left with the residual. Then I superimpose this residual in terms of a particular window, that in this case is 4 years. And you can see that we kind of align, right? We align, but then if you take the average, if they were not aligned, they will cancel each other. It will not be as coherent as this. As you see, it goes up here during the bull phase, it goes down during the bear, and then it stays flat during what we call the core. Stephen is coming up with all this terminology that I really like the core, right? The core is that period of time when we basically follow the power law and the deviations are more or less Gaussian around this flat behavior. So this is what is telling you that you're getting a flat region, because once you subtract the power law, you're left with just these random deviations. And here is when usually I should color code this also should be blue, because it's basically the beginning of a bull, right? Where we start to go up. Notice what happened in the previous cycles. We did go up. Last cycle, we kind of anticipated the time that we go up. In fact, we had an early top, kind of two tops, one early and then one that actually happened where it was supposed to happen here. And the bubble before that, it was much more regular. We had a bubble where, the top of the bubble where, again, it's supposed to be the end of the year. Same thing here. Maybe this can be interpreted as a early top.
Yeah, I have a question about that prior cycle, that last double bubble. If you look at the first of the two in April, that actually has a larger deviation from the power law, even though it wasn't the maximal price.
Yeah, exactly.
So what if you shifted towards that? How would
shifted in which sense?
What if you chose that to be the peak?
That to be the peak, this one?
Because it has the larger, no, not on that one, April 2021.
This one?
Yeah, because it has the larger log residual.
Yeah, in my interpretation is that it was an anomaly, in the sense that, I like the fact, of course, it's an interpretation, right? For example, there is this model. It's really curious. One day, maybe we should discuss it. There is this analyst. He's also a mathematician. His name is Leo. Have you ever seen his model? What he does, it takes he adds one parameter that is the biggest limitation in that approach, right? It has a very similar formula where he has the power law, then he has a periodic oscillation, and then a decay of peaks. Mm-hmm. What he does, he adds a phase that is a function of time. So this is one additional parameter. And by changing the phase, you can change the period too, right? He makes it a function of time, and strangely enough, he can include the first bubble. If you do this little trick, you can adjust it where it actually includes the first bubble, and then includes the second bubble, includes the third. But now, because the period is kind of compressed, the fourth bubble happens here instead of happening here. But that is under this assumption that the length of the bubbles becomes shorter and shorter. My objection to that is two things. One, okay, it looks to me that it's simpler to explain the bubble as happening all in quarter four, because if you do that, when all these kind of seem to be aligned. Now you will have to explain why we had this, but you will say, well, sometimes we have an early bubble, right? The fact that, so for example, also this was an early bubble. So it happened 2 times over 3. And the fact that it was larger, it doesn't mean much. It's both of how big it is and the timing of a bubble. So this is a simpler explanation, because all what it requires is some kind of periodic bubbles instead of being, adding these additional parameters. Every time you add an additional parameter, you're making your model more complicated, and so you risk overfitting. Now you cannot explain this bubble, but again, this bubble happened before the halving, so maybe it is different from the other ones. Right? It's just an hypothesis. My hypothesis is simpler, that these bubbles are periodic. They happen all in quarter four, and one way to explain this is because of COVID. There was a lot of liquidity around, created by the stimuli and so on, and so kind of made the market peak early. So that is, it's just an interpretation. One thing that goes in the favor of this interpretation is that Leo's model predicts another bubble, if his model is correct, where this was the real top. He predicts a new top in April, and I don't think it's happening. I think that model it should be discarded, because it's quite unlikely we are going to reach a peak in April. So it's good that he created that model, because it's kind of an alternative model. So the idea that we still have another bubble, because if we have another bubble in quarter four, then this idea that they repeat at 4 years intervals and they happen every time, will be validated even more strongly, right? I mean, we will have now 4 bubbles, and they all happen in quarter four. So this is why I think this cycle will be important to determine which models are correct, right? If the cycles are gone, how they behave, etc. Right now, I'm sticking with this model where they all happen in quarter four. So I'm waiting for the new bubble to happen here, if it happens at all. But in comparing the cycles, we see differences, right? So we kind of anticipated this rise up because of, again, here we could attribute this, you called it fake out, right? You use this terminology. We had a fake out. We went above the power law. We should have been confined between these two ranges. And in fact, we went above it. And then there was a correction. And again, if you want to find the cause, I would say that this is due to the ETFs, right?
That's the ETF fake out.
Yeah. That is the ETF influence. Yeah. But the correction was not big enough, right? It didn't bring us all the way to this region where the price is supposed to be. Then we got another push because of election. And so basically, I think we are anticipating the usual movement that is much more regular. According to the theory, we are supposed to be very close to the support line, then start to leave the support line to reach the top. And last time it happened too early. This time, we also did a lot of things too early, but we are not peaking. We are kind of staying there, like we are waiting for something to happen. So yeah, we will see. We will see what happens. The top is not excluded. So far, I did a calculation that if we started tomorrow, if a bull market continues tomorrow, we will need to do about 0.27% a day. That is kind of almost 3 times what the power law does right now, because right now the power law, if you use the formula that we use all the time to calculate returns, theoretical returns, the percentage per year is about 42%, right? And that corresponds to about 0.1% a day.
Right.
So if we go to 0.27%, it's almost 3 times what is the typical performance of a power law. So very turbulent, very active. If we see that type of behavior, then we will reach the power law. Have you done an analysis of these parameters since just isolated? Because it will be interesting to isolate each single bubble and see how similar or different the bubbles are. Maybe you can do that, right, when you have a chance. Because
Well,
are the bubbles similar? Do they have
I'm going to do the moment analysis by phase by 4-year chunk.
Right, and see if this particular bubble, because we are supposed to be in a bubble, is different from the other ones, right? It kind of visually looks like, but is it really different? We see a lot of, we saw a lot of volatility initially, and then we know that we spend basically 2 months or 3 without not doing much. Now we do see these crazy 8% moves, right, in both directions in the last few days.
Yeah, and we've got a big Friday coming up, so
yeah, it does look different. It's almost like each bubble has its own personality. Anyway, so this is part of the analysis that I want to share with the audience. Well, I think we are coming close to the 1 hour. Actually, we went above the 1 hour mark. We covered a lot of interesting. What is the user of Leo? Okay, so let's look at some of the questions. We do get some. First of all, I can do the overlay. We do we get nice comments. Okay, so there is this question. Do you have anything to say about this?
Fair value, if you do a quantile regression, the median is 80,000. So all I'm saying is we have support. I don't worry about a few $1,000s here or there. You have to think logarithmically, right? You have to think in larger scale, longer time frames. Everything else is noise.
Yeah, I was actually surprised on how strong Bitcoin is, right? Because under the circumstances where the market was crashing, there were all these uncertainty due to the tariffs, etc. It was a pretty good correction, but Bitcoin showed a very, very strong support at around 80,000. People bought very quickly. So that means the system is very resilient, right? So and it's relatively easy to push it down because of all this turbulent behavior that we describe. The Bitcoin reacts to certain situations where the price can correct by 10% easily, but you recover pretty quickly, and now it's stabilizing. So all very, very, very good signs that if you are not used to Bitcoin, you will be surprised. But we have seen this behavior over the entire history. Bitcoin is like this. So we are now back to almost the 95,000 where we were within a few days, right? And actually, this volatility is a feature. I don't like when Bitcoin stays too flat for too long, right? It's not very much. But Bitcoin does even that, but then that it's almost guaranteed that it's followed by a lot of volatility after that.
I mean, we just showed the moves are big, right? And so you need to make that work for you. Make volatility your friend.
Yeah, it's a fun girlfriend. Actually, it's almost perfect because it stays with you for a long time, right?
It's a hot girl behavior.
Yeah, it does everything, right? It has hot girl behavior, but also stable over time. It's almost like, have you ever seen the diagram of a girls, with hot girls and craziness girls, right? The scale, and there is something called a unicorn, right, where she's all
Right.
crazy, and it's almost like Bitcoin is
Low
like
craziness but high hotness is
yeah,
rare. And that's what we have here.
yeah, exactly. And a touch of craziness when it's actually fun to do it, so it's almost perfect. It's like where can you find something better than Bitcoin, right? Nowhere. So that is the idea. And there is this comment that is more like a compliment. Thank you so much. I think there is a lot of cool physics, but we are trying. I think physics is cool per se. Then I should have been invited. Okay, we should be invited to the White House. If I do, we will go and make a presentation for sure. Kepler could have chosen any constant for time, like Satoshi could have chosen a constant for supply cap. I don't know about these 21 days.
Yeah,
Do you know about this?
I'm not familiar. I'm not familiar with that as a
No, me
measurement
too.
basis. Yeah.
I can look it up, but I mean, 28 days is the lunar month, but 21 days, I've never heard about that. Maybe you can send me a DM and explain it to me. I'm curious. What is a user? What is the user of Leo?
Leo, they want to know his model. They want to know his handle for Leo's.
His name is Leo Hart. Leo Hart. Let me see if I can find it. Leo Hart. We had a few discussions online. In the beginning, I was a little bit aggressive towards him, but eventually we came to some kind of understanding. What we can discuss it another time. Maybe, in fact, we can even invite Leo. I told him that he could come to the show. Maybe he can present his model.
That's it. Thank you.
Yeah. And then I started to be addicted to your physics video. That is the goal. A few watts and cheap devices, crypto lottery pools, maybe an evolution. Do you understand this question?
I do not understand the question.
Delayed bull, prolonged bull. I'm not sure. I think we are somehow in a new territory because this bull doesn't look like very much any of the other ones. It's a little bit different, and we need to understand why. I think it doesn't. We are not yet at the point. For example, I think it helps us to understand certain things. Like, I really don't believe there is like a Leo model says we should have had a top in April or May at most. I don't think that is likely. So it's a way of eliminating certain models. By the time we arrive to the end of the year, if we don't see a clear top, we could say that we don't have cycles anymore, or at least we didn't have this cycle. It's possible that the cycle continue next.
We're going to have cycles. We're going to have bubbles because that's the nature of human beings.
Yeah.
And it's also about the nature of liquidity,
right,
that comes and goes.
Yeah.
And
maybe the regularity of the bubble will be put in question. So we will see. We need to keep our eyes open, because this is one of the things that models are useful for, right? Is comparing what happened in the past with what happened in the future. If there is a deviation from the model, it's not that the model is not useful anymore. In fact, it's very useful because it allows us to compare what happened in the past with what happens now. You can make a difference and say, oh, now things are different, right? And you actually quantify. You can quantify how big is the difference, what is different, right? So even actually, many times physicists love when models are not followed anymore, because it means that you're learning new things. There is new things to learn. But models are all about in describing regularities, right? If a regularity continues, okay, it means that basically the system is very important feature in the system. The main characteristic here is the power law. The power law, if anything, is being reinforced by the last years or so. You can calculate what was the average return over the last year. It's exactly 0.1% a day. This is what we exactly did. That is the power law returns. So we are actually following the power law even more than before. Okay. Are you going to do CASPA? I don't know. Maybe.
I don't know. This is the physics of Bitcoin show. We've got our hands full.
Yes.
Yeah.
Now, CASPA for some time seemed to follow power law, so it could have been useful to compare what is similar and what is different from a power law of Bitcoin. Maybe if we run out of topic, but I think it will not happen because Bitcoin is an infinite topic. There is some space for that. Now, if the power law in CASPA was still valid, it will have been an interesting thing, because then we'll say, why only CASPA and Bitcoin, But right now, because it doesn't follow the power law anymore, it could have been a coincidence, it could have been something else. I think it will not be very useful. Okay. Maybe we need the money supply to increase. I do have a graph of that. We can look it up. It seemed for a while, liquidity, the global liquidity was going up. I think it's taking a little bit of a pause right now. This graph shows that. This is the purple line is the liquidity model. It's basically a price of Bitcoin based on the existing liquidity. It's mostly international liquidity. There is no almost contribution. I mean, I include it, but if I subtract the US liquidity, stays more or less the same. It means there is not much contribution from US right now to global liquidity. But I think the secretary, if I remember well, the secretary of the treasurer say they are going to decrease interest rates, right? And that should bring up some liquidity.
No, I think they're going to pressure decrease in interest rates by the Fed. They would like that to happen.
Right.
And M2 has been running at half of its usual rate. So for the past 6 months, it's been running at half the normal increase, which would be about 7% per year. So yes, you need more liquidity. US and China are the two largest contributors. The shadow banking liquidity has picked up lately. Liquidity in general has turned up a little, and it tends to lag by about 11 weeks. So the pickup that has occurred a few months ago may start to kick in here. But I think we need to get past the budget stuff, and we need to get past the current uncertainty around tariffs.
Right.
So this month, is still a highly uncertain month, and markets don't like uncertainty.
Yeah, and that is I think the main problem with the tariffs is not much if a tariff are good or bad. The market adapts, but the worst thing for market is uncertainty. And until this idea of a tariff is digested and processed by the market, there will be uncertainty. But I think is already adapting to that. So it's a momentary, disturbance. I think we are going in the right direction. And I think actually a correction in price, the fact that the liquidity is moving up and these two things are coming closer, it's a good sign. And by the way, Fino Bonaccino, I like your handle. Yeah, because he has a cappuccino with some kind of Fibonacci spiral or something. It's very appropriate for the show. All right, guys. Maybe, okay, let's take this last question and then we can close. We can stop the show.
I think that eventually nation states adopting Bitcoin has to happen, because we need to supply more and more capital into the market in order just to sustain the power law. So currently we need about 800 billion per year of new inflow of capital just to sustain the power law. And, that number keeps growing, right? It's actually, it's a first derivative, but modified by the multiplier effect. And the multiplier effect is about 2.5 on average over long time scales for Bitcoin. So you can actually calculate it as what it should be. And it's, right now we're around 2 trillion, and 800 billion times 2.5 is 2 trillion. So you can see already that's sort of the right order of magnitude, but you can calculate it from the power law and then apply this money multiplier. In order to get those large amounts, you need corporations and not just Taylor, and you need pension funds and insurance companies, and you need sovereign wealth funds, which are government, and you need treasuries. I don't think personally that the central bank should be where the strategic reserve is held. That should be held by the U.S. Treasury, because in the long run, we don't want central banks.
Yeah, and so basically the idea that if Bitcoin is really truly scale invariant, it's a very typical idea of scale invariance where you see agents, right? These agents that the Forbes article was mentioning, at all the level, from the individual level to all the way to nations, and maybe even the largest one that is the entire world, right? And this is very typical. This is what you see, for example, when you have a transition from water to ice. If you zoom in that smudge, right, that is made of ice and water, you will see this concentration, this block of ice at all the levels. Some of them are visible by eye. They will go all the way to molecules, basically. And this idea that all these little blocks of little clusters of ice form at all different scales is exactly an intuitive ideas of what scale invariance means. That there is actions, there is something happening at all the different scales. And that is exactly our understanding of what Bitcoin is. That there are all these agents, including the governments, that basically do the same thing. It's just their effect on the system is proportionally bigger, and that proportionality, it's the power law. It's really how things scale up. It's the power law. So it's part of a theory to say, no, the global, this strategic reserve is just part of a plan. It's actually, in a certain sense, the power law predicted that that is going to happen. That will be a scaling all the way to this large naked eye, because this is what will be when you look at the ice. You will see this huge big block of ice forming, but there are blocks of ice forming at all the levels, and they're scaling. It's a power law. It is the power law. So if you really understand, if you go deep and starting to study these things, then you understand things like that. But this is why to us the power law is such an incredible framework to understand Bitcoin. It's more than a model. It's really a state of mind to understand both what is happening to Bitcoin right now, the future, and also its essence. Why this is happening, right? Because it's the global phenomena that is involving all the different entities, all the way to nations, right? It's not a fade, it's not a fade, it's not a Ponzi scheme. In fact, it's the opposite of a Ponzi scheme. So this is why it's so important. This is why we emphasize so much with power law. It's much more than a model. It's really a framework to understand Bitcoin. Do you agree, Stephen?
Yes, sure. And I like this comment by Iceberg about he used the log periodic power law to analyze the DXY downturn. So that's nice.
Very good. Yeah, many people are starting. I know Iceberg is he's doing some nice work sometimes. And yeah, so it would be great if other people join us and explore these things using these tools. This is one of the great things about science. That is an enterprise that you don't do alone. People join you and explore many different things. Okay, guys, I think we had a very nice show. We covered a lot of interesting topics, and I think this is a good place where to stop for this evening, and we can see each other next week. Thank you, everybody. Good night.
Thank you, everyone.